some people who are saying, "Oh, you're next," and whatever you do, we're going to buy it up. I mean, I don't know if there's a target on our back just because of GameStop. We realized things were radically different last year when we were short this new total fraud called GSX. We still are, but we were shorted in much bigger size and got squeezed way up by what was really a consortium of hedge funds who I think engineered this. So yeah, like the game's been different since COVID, and we adapted last year, and I think we adapt going forward.
Is activist short selling, and I'll make a distinction between activist short selling, which is what you do, you're very public about the stocks you're short, versus what some other hedge funds do. Is that a viable strategy right now, given what has transpired over the past couple of weeks?
Well, I've long said that what my business needs is a supply of people in management positions who are doing things they shouldn't be doing, whether they're committing fraud from a legal perspective or they're just manipulating financials and being promotional. The supply of people doing that is not decreasing. So we have that. Now, does this matter? Does research like this matter? Yeah, I think it does. But, well, let's say from a social utility perspective, yes. But there's less social utility to it when SEC isn't enforcing as heavily as it used to. So I like to think that under the new administration, there's more social utility, there's more enforcement, kind of a counterweight to, I think, the extreme dishonesty that's really surged through the markets the past several years. As far as whether this is economically viable, I think so, but the adaptations we made last year, we realized, hey, we have to trade a lot more. We didn't used to have a full-time trader. We did not spend time looking, we didn't have anybody who was looking at the screens constantly, tick by tick, and looking at the options market. Well, that's an adjustment we made in Q3 of last year, and we pulled out of a nosedive in late Q3 going into Q4, and we had a decent year after all by realizing that it's a trading game, it's flows driven, it's technical, and we're going to do what we need to do in order to survive and produce this research that, as I said, has social utility.
What other changes, Carson, do you think you might have to make to the Muddy Waters business model or its tactics for your firm and its approach to survive and to thrive?
Well, one of the things that I realized a few years ago is that the human attention span has contracted in the 11 years I've been doing this. So we had shortened up our reports. So we stopped dropping these 100-page reports, everything we knew about these companies. And so they're shorter, more digestible. We began using video more. And last year we launched, I launched separate from the Muddy Waters business, Zeros TV, to focus on this short-selling oriented, contrarian investment content. And I think that that's a key adjustment because we are seeing that there's a lot of pressure on media platforms to restrict speech that becomes unpopular. And I'm not, I'm not averse to some of these restrictions that have been implemented. I just realize that it's very difficult for platforms, whether they're traditional media platforms such as Bloomberg or it's Twitter, to calibrate where they should place these restrictions.
Hang on a second. I respect what you're saying, but what you're referring to is the reality that there are white hat short sellers out there and black hat short sellers out there, and some people feel the need to draw a distinction between the two and to protect themselves against the risks, attendant in giving a platform to black hat short sellers, and sometimes it's hard to tell the difference. What I'm actually after more is this: shortening your reports, using more video, putting yourself out on Zeros TV isn't necessarily going to change this impression people may have, Carson, that you're part of some financial establishment, is it?
I mean, I love it. Where do I start? Okay, so we have like Chamath, or as I call him, SPAC Jesus, out there railing against short selling, and others saying, oh, these guys are the establishment. I think Chamath and many of these people probably have weekly meetings with Goldman Sachs and Credit Suisse, which, by the way, are two companies that have told us in the past to go F ourselves. In fact, with Goldman, it was an annual ritual. Somebody would call up, hey, I noticed you don't have sales coverage here. Would you like some? Sure, let's go through the process. 1 week later, Bankers Asia reputation risk. I'm sorry, man. So when we get tagged as establishment, I mean, you can't be more inaccurate than that. I mean, it's almost funny if it weren't for the fact that I now have all these people like trying to troll me through direct message because I'm establishment. So I don't know, it's just, we're the ones calling out the excess in the bull for years. So I know it's not true.
No, that's fair. It's certainly a fair representation of how you feel. That much I'm absolutely certain of. You have to agree at the same time, there is a palpable sense of anger out there, and however misdirected the anger may be, it exists. So to the degree that the day trading army on Reddit is channeling some anger, where should this anger be directed? Who are the villains in this story?
Look, this anger, okay, I had not gone to Wall Street bets until a week and a half ago. So I'm not an expert on Wall Street bets. I'm not going to pretend to understand what they're thinking, specifically. But from my perspective, people I know, everybody is angry. I mean, COVID, and my family and I are far better off than most. But when I see the sacrifices my kids have to make, other people's kids who have it much worse, I mean, I have, over the past several months, I have found myself doing things that I have not done since adolescence, like taking objects and slamming them repeatedly into the ground out of frustration.
It's not just the frustration with COVID, though. There's a sense of frustration, anger over, and a feeling, let's say, that the market is rigged, right? That the cards are stacked against the retail investor, and they see hedge fund managers who short stocks as their enemy. That's the anger I'm talking about. Where should that anger be channeled?
But that's where I'm kind of questioning that narrative. Is it really anger that there's a hedge fund out there named Melvin Capital that's short stock, or is it just it's a feeling of anger in general, and anything can set it off in any given direction? I mean, I don't know the Wall Street bet psychology, but I feel like we are, as humans, when we get together in a mob, right now with all this anger, it can be directed anywhere. And that's why I'm really, that's what really upsets me when I look at SPAC Jesus and other fake populists, because they seem to be saying like, take your anger and buy what I'm selling, man. That's like giving it to the man, that's giving it to the establishment. And so I just feel like there's anger, and it can go in any direction. It went at Melvin, it went at Andrew, and next week it can go, at Kamala Harris. I mean, who knows where it goes next? Is my point.
Do you share the view that financial markets are broken or rigged, and maybe in some respect share the anger that those people may be having trouble channeling, or are channeling into things that might to you seem misguided?
Yes, financial markets are broken, and really what's been going on is we're in this cycle of blowing bubbles that suck in the middle class, and when the bubbles burst, wealth is not destroyed, it's just transferred. Once again, it gets transferred from the many to the few. In the time I've been in the markets, I saw that with internet, I saw that with housing, we saw that with going into COVID, and the response each and every time by policymakers is, because the bottom line is all of these bubbles are caused by too much leverage, too much credit, but each and corporate bonds. And so we lack the political will when things stabilize to say, okay, let's stop, let's kind of stop this economic policy that's dependent solely on inflating asset prices. Let's dial it back. And we saw the Fed starting to do that, pretty late in the game, but in 18, and then they lost their nerve. So we just repeat this cycle. And when you look at GameStop, when you look at the fact that, well, effectively, nobody is out there anymore asking which companies are the ones that can really use capital efficiently. It's, well, where is passive buying? Where will passive buying? So like, how can I chase this as a momentum investor? It's all technicals, and like the fundamental investors are the value guys, and that's become a punchline to Wall Street jokes for a number of years now. So these markets, why are they so divorced from the real economy? They're not feeding into the real economy. I mean, they're not pricing, this is not the wisdom of crowds in terms of trying to figure out which companies, which entrepreneurs can use capital efficiently. It's just a game.
How would you fix it?
Well, we can't raise rates now. I get that. But we need to have the discipline pretty soon, as we're recovering from COVID. Make capital more precious, make it more dear, raise rates. Dislocations, higher taxes. Those of us who are doing okay, we do need to pay higher taxes. But let's also, one thing I want to caveat there is we need a government that can effectively deploy that. So, more of the same, spending programs probably don't work either. But we need a combination of monetary and fiscal policy that makes sense, or else we're just stuck in this, building a bigger powder keg to explode again and just build another powder keg type of economy. And it always transfers wealth from the many to the few, like SPAC Jesus. And that's what really gets under my skin.
Since you invoked government, as regulators take a look at what's transpired over the past couple of weeks, do you think there's any reason for them to uncover or to suspect that they'll uncover misconduct?
I mean, this to me doesn't seem like it's a legal issue. Now, to me, what might be more interesting is I talked about how we were short GSX, and that seemed like an engineered squeeze by some hedge funds. So, if anything, some very smart, sophisticated hedge funds have been playing the squeeze game for a while. And it's kind of like the same ones, I think, end up getting into these squeezy names, and boom, it squeezes.
Well, hang on. Do you think that it was hedge funds squeezing out Maple Lane and Melvin and Andrew Left of Citron, or do you think it was day traders on Reddit?
Initially, no. But the point that I'm making is that this is effectively what happened with GameStop, et cetera, was a democratization of this tactic. And I have wondered, especially as we were getting squeezed on GSX, I have wondered, like, is there coordination there with these hedge funds? So what wouldn't surprise me, I mean, I don't think you can look at, the Reddit message boards and people saying, like, I'm going to buy calls and I'm going to buy calls, and say that's coordinated trading to the extent that it rises to manipulation. But maybe where that, some attempts to poke at that go are, looking at the hedge funds that have been employing this tactic for some time and really asking, well,
Carson,
okay, what constitutes coordination? Did they cross the line?
Carson,
that could be interesting.
I want to squeeze something in before I run out of time. What do you think ultimately happens to the stocks driven sky high in this frenzy? GameStop, AMC, Bed Bath & Beyond, and others.
I mean, they're going to come down. I hope they sell shares before they come down. I mean, that gives them more of a lease on life. But they're coming down at some point. I don't know when, but they will come down.